Lee Bratcher here. I'm the president of Texas Blockchain Council. I had the great privilege of sitting down with Andy Samu to have a conversation about the investment banking space as it relates to DeFi, Web3, Bitcoin, blockchain, all of the above. I hope you enjoy the conversation.
I'm Andy Samu. I'm the editor of Disruption Banking. We're based out of Canary Wharf, and I really wanted to pop down to Texas Blockchain Council today because A, they're really in the news a lot. B, there's so much going on in Texas as well. So today I've had the very big fortune to meet up with Texas Blockchain Council. I've been following Texas Blockchain Council for a while, and actually I was really excited to meet Lee Bratcher today. Some of the things that are happening in Texas affect all of us globally, both the internal migration that's going on here within the US when it comes to Texas, the opportunities that we hear about, and I'll be honest with you, the colossal amounts of wealth in Texas as well. And when you're at the cusp and at the meeting point of these challenges together, then it's wonderful to have someone like Lee Bratcher to discuss them with. I mean, as an introduction, the setup here is amazing. In London, I don't know whether it's the same over here, but we're seeing a lot of companies spending an awful lot of money on tech, not from the tech perspective, but more on multimedia tech. We're seeing banks creating production studios. I mean, I was in Nashville now. I was in Alliance Bernstein's office, and they have a massive production studio in there, mainly for their internal staff.
Wow.
But it's becoming like a mainstay of our industry, isn't it? A little bit now to spend so much on production. So, what's the concept behind all of this? You've been doing a lot of blogs here. You interview a lot of. Well, who's the most famous person you've interviewed here? Go on.
Probably the governor of Texas.
Okay.
Greg Abbott, or Andrew Yang. I don't know if you know him.
I've heard of Greg Abbott, definitely,
Yeah. Greg Abbott and Andrew Yang are probably my top two interviews.
And it was Bitcoin mining. What are the main topics when you sit them down?
For Abbott, it's usually Bitcoin mining, job creation, innovation.
Yeah.
All that stuff.
And that's exactly what I wanted to start on, because the thing that we're hearing about most when it comes to Texas is Bitcoin mining.
Mm-hmm.
That and the mayor of Fort Worth and what she's been doing, and that's a phenomenal story. I mean, were you involved in that? Did you speak to her about the concept of Bitcoin mining in town hall? Is it town hall you call it?
Yeah, City Hall.
Yeah, you're donating the machines to Fort Worth, really. How did that come about? What, she popped down here, the mayor, or what, you were out on a dinner with her? How do these things happen in Texas?
You know somebody who knows somebody. So we have a good friend who knew her really well, and we got it all together and made it happen.
Okay. Were there any kickbacks from the local community? Because the further north you go in America, the more they talk about ESG.
Yeah. There was a little bit, but we had some lines ready. There was 3 machines, so it was like the equivalent amount of power as a vacuum cleaner.
Okay.
So we just had this one-liner for the mayor. As soon as she got pressure on, like, well, doesn't this use so much energy? She would say, well, this uses about the same as a vacuum cleaner, and also these machines were donated, so no taxpayer dollars were spent in this, and all the proceeds are going to education.
That's fantastic.
So it's like you can't argue with.
No, you can't. No, that's really good. But on the topic then, is crypto quite popular here in Texas? Because I saw a report today in Australia, I think 29% of people have had crypto or hold crypto. Have you got any statistics like that here in Texas?
We're actually 29% as well.
Oh, are you? Okay. Yeah. On the topic of crypto, yes, I landed at New York, was it about a week or so ago, and the first thing I saw was Tron adverts. Everywhere, really. It was quite shocking. But then, the further I went into New York, the less adverts I saw. And the further south I went, there's nothing. Not zero. I mean, maybe here in Texas so far, I haven't seen any advertising for crypto, to be honest yet.
Yeah.
Maybe I'm missing it.
Austin has a few billboards.
Okay.
Dallas, I've not seen any.
Yeah.
I think the difference in Dallas is it's a really expensive media market. And so real estate, banking, some of the big industries here, oil and gas, kind of dominate the traditional media markets. So in Texas, crypto is usually pretty nuanced and like precise digital marketing rather than like billboards and outdoor traditional marketing.
I understand, but we've heard about crypto.com spending money on stadiums in America and what have you. That hasn't occurred here either. Yeah,
it actually has.
Oh, it has. Okay.
So the Dallas Cowboys,
yes,
the most valuable franchise in sports.
Indeed,
bigger than Manchester United. I'm told. Just signed a deal a few months ago with blockchain.com, which is a big exchange.
Yeah, we know them. Yeah.
I think they have a pretty large presence in Europe. And they did a big sponsorship deal with the Cowboys, the first crypto exchange to partner with a NFL team. The NBA's been doing it for about 2 years, but the NFL just started. So that happened earlier in the summer.
Do you embrace that kind of initiative here, or?
I think it's great. Yeah. I got to go to the press conference. I knew some folks on both sides. I know some folks on the Cowboys marketing team and sales team, and I know, blockchain.com is a member of our industry association. So we were glad to see it happen. I think it's been very fruitful for both organizations. Of course, we're still in the opening quarter, if you will, to use a football analogy, of the partnership, but it's a multi-year deal. I think it's going to be great for both organizations.
Okay, and do you find education amongst the community to be sufficient to the amount of crypto exposure that people have?
No, not at all. Yeah, that's a huge challenge for the general populace, for regulatory agencies, and for elected officials. So we do a lot of education on all three fronts. Of course, we can't reach out and connect with the general populace at large, right? We can do this. We have this YouTube studio. We do educational efforts in person, but those reach 100 people. A video may reach 1,000 people. There's 30 plus million people in the state of Texas and 330 million in the country. So a lot of education needs to be done. It's a little bit easier to reach an elected official because there's fewer of them. You know where to find them. And we've just been good at building like grassroots support so that they see this as an issue that their constituents really care about. And perhaps they're also very interested in it. Because believe it or not, Texas elected officials, the vast majority, especially in the legislature, are part-time legislators. So they have a full-time career as a lawyer, banker, doctor, whatever. And then they come to the legislature for about 4 or 5 months every 2 years. So they're very part-time. They're like, Army
it's a
reservists.
little bit like jury service, isn't it?
Yeah.
Okay.
A little bit more involved than jury service, but it's an apt analogy.
Okay.
And they're pretty well unpaid. They make about $7,100 a year.
Yeah.
So that's less than minimum wage, I'm pretty sure. So they do it as a service, and we're able to engage with them and educate them. And they also work in industries that are adjacent, right? They're private equity, they're lawyers. I've kind of mentioned some of the fields. And so they're curious about this. Maybe they're in real estate. So they want to learn.
Okay, so when it comes to teaching them, we got all these layer 1, layer 2 options and what have you. I mean, you sit down in front of a legislative individual and you say, Polygon and Polkadot and what have you. I mean, what is the reaction you get? How do you go about it? I mean, that can't be easy, surely.
No, and I start with 500 years ago. I've got this slide deck, and I pop up a slide of a Franciscan friar named Luca Pacioli, who invented double entry accounting 500 years ago. And they're like a curious look is on their face, and I tell them, you probably think I have the wrong slide deck, but this is actually where we're going to start. So I very briefly talk to them about the evolution of accounting, like 30 seconds, right? And then I get to this is the next iteration of accounting. It's distributed digital ledger. It's decentralized. I start with the white paper and Bitcoin, get into digital scarcity, talk about Napster and how Napster disintermediated the record industry by basically blowing a hole in digital scarcity. Like you can't keep things that are in the digital realm scarce. But until 2008, when Satoshi writes the white paper. And so we certainly start with Bitcoin, and we educate further into tokenized securities like tokenized real estate. We talk about the regulatory environment, what banks can do. In Texas, Texas charter banks can custody crypto for their clients.
Okay.
So talk to them about that. A lot of them didn't know that, even though their friend, the banking commissioner, Charles Cooper, was the one that he and his team of attorneys wrote that regulatory guidance for Texas banks, like Comerica we were talking about earlier, one of the largest Texas banks, Frost, Comerica. Some members of ours like Third Coast Bank and Vantage Bank and several credit unions like Lone Star Credit Union. They're all getting into this because while you and I are going to custody either in our hot wallet on our phone or a cold storage wallet like a Trezor or a Ledger, there's a lot of people out there that won't. They're just not comfortable with that. And especially like maybe our parents' generation, they're in their 70s, they really just want to trust their bank. And who am I to say that that's the wrong choice? Because while we do want to educate family members and friends about self-custody, sometimes they just can't get there. And I'd rather them have a little bit of exposure to the asset class than just say, no, this isn't for me. Let me just stick to my bonds and mutual funds.
Or municipal bonds as well, as I've been learning about this week. It's an unusual Americanism, isn't it? The municipal bond market probably generates a lot of your local banking as well, doesn't it?
It does. The municipal bond market is strange because very large institutional banks play in that space, and the most mid-sized banks cannot compete. And there are thoughts out there that you could even tokenize municipal bonds.
Well, yeah, exactly. I mean, schools, you're building schools out of municipal bonds. Yeah, your stadiums, infrastructure for public services. Yeah, right. I mean, this is exactly what decentralized finance is for now.
Exactly. And you can get littler players, like a bank with $1 billion in assets under management can play in that game, where they can't be the primary bank behind a multi-billion-dollar municipal bond for the city of Dallas.
Yeah.
So
exactly.
It's fascinating the way that this is sort of democratizing finance, getting rid of this illiquidity discount that we see in a lot of the private equity and in the municipal bond market as well. So
over in the UK, we're quite keen on watching Elizabeth Warren. I'm not sure whether we have an opinion on her or not, but clearly when we saw Gary Gensler being parachuted in to run the SEC, our ears pricked up to find out more about what his plans were going forward. We've been covering Gary Gensler a lot in our newspaper recently, and he's trying really hard to reform things. The Forbes have some opinions about him, other people have other opinions about him, but sitting here in Texas, where your tax rate is what it is, as in insignificant, how does Gary Gensler and the SEC affect Texas? Is there any kind of effect here? Do you feel the presence of Washington or New York here?
Not as much as you would think. A lot of the industry here is not even regulated by the SEC. By that I mean like a Bitcoin miner, for example. They deal with the IRS on tax issues. They deal with ERCOT on energy issues. ERCOT is a state energy regulator and grid operator. But they, since Bitcoin is a commodity, they don't really have to deal with the Securities Exchange Commission. Now, we do have different projects that have gone different ways as a security, like Hedera Hashgraph, which is based in Dallas, is a large layer 1, similar to Polygon or
Avalanche.
Yeah, Avalanche. Yeah. So they actually did the compliant way, and they went ahead and did the securities filings and all that stuff, probably a Reg D or something like that. So, and then you have others that are like in this in-between phase, like the Avalanches and the Polygons, who are like, well, we think we're sufficiently distributed to not trip up the Howey test, but we don't know for sure. And then you have a lot of projects that are just closing their eyes and they're just wrong, right? You have a lot of projects that are certainly securities that, will eventually, if they haven't already, be targeted by the SEC, and probably for good reason, because they aren't sufficiently distributed. They do have, this pre-mine that looks like investors pooling money with the expectation of profit, all these Howey test prongs that are being hit. So I can't speculate on which ones those are because I'm not a securities lawyer, but they're out there, and the SEC is starting to take action. I don't love this regulation by enforcement thing that they just, instead of setting out clear guidelines, they just pick on people and just start smashing them down. That's not great. That doesn't help anybody. in the U.S. or globally, right? Because these projects are global projects.
Well, we look to the US. We all look to the US. There's nothing we can do about it. It's just how capital markets works, and it's the same process, isn't it? But on the topic of capital markets, and not to talk about Gary too much, because I'm sure he's getting enough press as it is.
Do you like how I didn't even answer the question about what we think about? No, I will give you my honest opinion. It's a hot take.
Not on the camera.
I'll give it to you right now.
Okay.
I actually think that other than the regulation by enforcement, Gary Gensler is pretty sharp on these issues and pretty consistent. I'll get some, tomatoes thrown at me by the crypto industry for saying that, because most people really don't appreciate what he's done. And again, I concur with them.
But that's exactly what I was going to ask you, how long you've been in crypto, because I think that makes a massive difference on how you look at this.
Really?
Don't you?
2015 is about when I got into it.
And I think that, when you're that early, you're a veteran. And a lot of the people in crypto today, something like 70% of people in crypto today have been in it for 2 years. Yeah. They haven't seen the first ICO winter that we had. Right. Was in 2017. Yeah, people aren't aware of what that did to the market. Right. And when you're looking at Gary Gensler today, as a hodler, I assume, you're thinking about the history in more detail than somebody who's only been in there for 2 years. Is that maybe the right way to look at it?
It could be accurate. I mean, I got into it in 2015 as an academic, and unfortunately not as an investor. I mean, I bought some and played with it, but...
You're the guy who bought the pizza for 10 Bitcoins, yeah?
Absolutely not. I'm the guy that was a professor and only had a few $1,000s and was like, hey, I'll invest a little bit and you get great returns, but if you don't have money, you don't make money. So it's I was looking at it more of from a theoretical perspective and less as an investor. But the thing that's interesting about Gary Gensler, again, he's got his flaws. He's this regulation by enforcement thing is unacceptable. But he's really, really brilliant, and he's pretty consistent. So, and we certainly appreciate his deference to the CFTC on Bitcoin and potentially Ethereum as well, listing those as commodities.
Yep.
So those are positive things. I don't think we can take it and just say the SEC is total crap. They're looking out for the little guy, if you will. The fraudsters are coming after people, but they're also preventing the little guy from getting into tokenized real estate. They're preventing a lot of hedge funds and pension funds from investing in what they want to invest in. And I know we don't think of hedge funds and pension funds as the little guy, but pension funds are typically like the teacher's retirement funds or the firefighter's pension, police officer's pension. So, those folks are counting on beating inflation at the very least in their pension fund. So they need returns greater than 8%.
Exactly.
So you have to have 5% of pretty risky allocations. Right? I'm not a fund manager, but you can't have 1% of high risk and 99% of bonds and.
Well, we recently saw this in China. I'm not sure how much you followed it over here, but there was a couple of Chinese banks, and that situation came about very recently, and they're having quite a big problem in China now because of that.
That's right.
But going back to this, I mean, I think the problem with the crypto industry isn't necessarily the returns. I think it's the fact that it's always the bad news that gets the news.
Yeah.
It's very rarely the good news that gets the news, And do you not find that as well down here?
Oh, absolutely. Journalists love to write about things that get seen, and unfortunately bad news gets seen by more people, and that's just the way I don't fault the journalists for that, because that's the way the market works in journalism and media right now, as a function of technology and social media and other things. We need to collectively, we can't just rely on the journalists to change their behavior, because the economic incentives are such that that's what it should be. So it's broader than the journalists, right? The industry has to partner with media to say, hey, let's help you get just as many eyeballs on a story that's a positive story, or a story that talks about the democratization of finance and not just the Celsius debacle or something like that.
Well, exactly. I mean, the first time I came across Bitcoin in America, you had the digital currency group, I think, up in New York, and you had a couple of their members.
Huge company.
Very, very, very impressive.
Yeah.
You had a couple of their members going around running meetups, and to get into their meetup, you had to give them $5 in cash, and they give you $5 in Bitcoin. Otherwise, you can't come in.
Great idea.
Which was brilliant. It kind of, and this was happening 6-7 years ago, from what I understand. Yeah. Have you got any plans like this here? I mean, I know when it comes to events, we're trying to start selling tickets in NFTs now in the UK. We're still a little bit behind you, but maybe you've already beaten that horse, so to speak. What are the newest kind of ideas that you're coming out with here to make crypto more available and something that people can talk about more?
Yeah, so we do, at our events, we allow people to pay crypto, cash, or really not cash. Yeah, crypto, cash, or credit card. Like we have a big summit coming up in November, the 17th and 18th, 1,000 people in Austin, pretty focused on executives, regulators, policy, and industry. So a little bit different focus than the traditional crypto conference. But for example, we're allowing people to pay in Bitcoin or Ethereum for their tickets. So that's one way. I think the idea, so we run a Lightning node as well here.
Okay.
And we open up channels with different different node operators to try to increase the amount of liquidity that our Lightning node channel can handle. So we sell T-shirts in Lightning. We encourage people to, in Bitcoin on Lightning. You know what I mean? Sats on Lightning, and we encourage people to download different wallets. We don't specialize. We don't say everyone go to Moon Wallet or everyone go to Unstoppable. We kind of just say, hey, here's a bunch of good wallets that are quality and that are decentralized, and grab one of them, download it, and then, oh, by the way, here's Trezor and Ledger. If you're going to actually go into this pretty big, you don't want a 5-figure amount of crypto on your hot wallet on your phone, probably. No. I mean, unless you're a millionaire and you can afford to.
You don't do that.
Lose that much. So,
but when it comes to devs, do you have a lot of Solidity and Rust people down here, or do they work with you here at the council quite often?
We've got a board member who's a Solidity dev, really strong developer. Most of the devs are in Austin, in Texas. I mean, Dallas, Houston, Austin, but Austin has the lion's share.
Okay.
So we do run a lot of meetups down there. We don't do a lot of technical meetups. That's an area. We did a few where a dev will come down. There's a really good meetup in Austin called BitDevs. So if you're down there, let me think if you'll be there during the right time. But I know you're traveling all around the U.S., so you may be there when BitDevs goes on. It's a very technical meetup for Bitcoin developers, core developers. And so you'll have a core developer run it, but then a bunch of other devs who are just learning will come and learn. So that goes on in Austin. I think it's the third Thursday of every month, if I'm not mistaken. So a lot of work needs to be done there. We don't specialize in that at the TBC.
Okay.
So that's sort of secondary effort. Our primary effort is the policy and regulatory space. So it's really hard to do two things well, or several things well. Like we're a traditional chamber of commerce, so we do the business development, member, connecting them with their next client type stuff, and then policy. So we do try to do two things well. Those are the main two things. And so the dev education is just not an area that we can specialize in addition to those.
Okay. No, I mean, it's important to talk about, though, I think, sure. Because,
absolutely.
You need these people around you as well.
Absolutely.
But on the topic of dev, so, we have this problem in the UK right now, and in Europe as well, widely, where Web3 is starting to become the catchphrase. And a lot of companies now, coming up to companies and saying, why are you called blockchain? Why aren't you called Web3? How is this... I don't know if it's the revolution is the right word for it, but how's this change affecting your situation here?
It's interesting. There's a lot of different perspectives on the term Web3. It's so broad that I don't really know if everybody's concept of what it means is different, is what I'm saying. So to some people, it's sort of farcical. It's like Web3, what does that even mean? It's too broad that it can't mean anything. It doesn't mean anything. Other people think, okay, this makes sense. Web2 apps, the app-based economy on the internet, and Web3 is dApps and decentralized finance and different things like that. So I think you have this wide swath of people. Web3 sort of like has an identity crisis. It's so broad that to some people it doesn't mean anything. To other people it means everything in the blockchain and crypto ecosystem. So for us, we use it as vernacular in our lexicon, right? We talk about Texas becoming a leader in Bitcoin, blockchain, digital assets, and Web3. So we kind of use multiple terms so that people can place those terms in their context, right? Because if you just say Web3, people may not know what you're talking about.
Yeah, no, absolutely.
Be sure to follow their publication, Disruption Banking. Check out their website, their social media channels. They're putting out some great content on how to bridge the traditional banking sector, investment banking, with this new emerging and burgeoning ecosystem of DeFi, Bitcoin, blockchain, and crypto. Hey y'all, Lee Bratcher here with the Texas Blockchain Council. Thanks for watching. Be sure to like and subscribe. It really does help other people find us. If you like this content, check out the Texas Blockchain Council YouTube channel.